The stock market is at an all-time high. It closed at 6,500 and a bit for the first time ever. Winston and Sabrina back there are excited. And I want to share with you how we take advantage of the bull market that is to come, which I believe could be far bigger than the one we've just seen. I want to walk you through some actual opportunities on stocks to buy, and also how we just get better, how do we understand the system so we're no longer shaken out by the buggers who like to shake us out. No names named there, but you know who I'm talking about. So let me share my screen with you here, and this is the screenshot from Trade Vision here of the 6,500 close, which is just extraordinary. And the opportunity that's ahead of us here, I'll give you a few words on that. Tom Lee just came out and said, I think we're in a new bull market. There is a lot to be excited about. 2035 sounds about right for the end of the bull market. That would be a 10-year bull run from now. And you might think, oh, the guy is just a loon and he's pumping some ETF or something, and you know, but the data actually backs him up. Look at the length of bull markets. So say the 1950 to 1969, that was 19 years. Then we had the 1980s to 2000, that was 20 years. You know why I started investing? I started investing in 1999. That was a good time, wasn't it? Yes, that was like the worst time ever, but learned a lot. And we've only done 12 years so far. So there is any decent reason we might do that. Now, what happens between these massive 20-year bull runs? Well, you tend to get about 10 years of misery. Actually, the post.com bubble was 13 years, but something in that range. So yeah, the data backs him up. The data actually says this could be right. We are perhaps at the midpoint of a bull run, nowhere near the top. Now, I want you to realize something about this, because I think we must all realize the magnitude of this market environment, the kind of technological advancements that power a market like this comes around every 25 to 30 years. It's the kind of markets that investors and traders and those who want to retire, well, they dream of it. And I'm not saying you have to therefore be super active and be glued to a screen and any of that. I'm not a believer in that. But what I'm saying is that when this market is gone, or it's 10 years or less, we'll miss it. We'll miss it a lot. Now, do I think it's leaving anytime soon? No, I don't. But I do think we have some insane opportunities ahead of us. And I think it's important we internalize that we're living in what could be like the greatest innovation wave in the history. Like bigger than the internet, bigger than the steam engine, bigger than electricity, bigger than the telegraph, all of these things. We've got AI. We've got crypto, we've got quantum computing, we've got autonomous driving, we've got self-flying things, we've got space exploration, we've got gene editing, we've got AI healthcare, we've got all the VR stuff, we've got energy storage. There's so much innovation coming out right now, more than we've seen possibly, I would argue, any time in humanity. Maybe the Egyptians did something like that. But it's a very rare time to be an investor and a trader. And it's important not to take this for granted. That's really my message to you. And I want to help you out with not taking this for granted. So we're going to run on Saturday, your Labor Day weekend if you're in the US. I'm going to teach you how to do these things. I'm going to, first of all, motivate the heck out of you, because that's 90% of it all. I'm going to teach you how we find breakout stocks, how we actually lock in our gains with something I call profit locks. And you can join me on Saturday at felixprehn.com/training. And how much does it cost? It's free. I love doing these. And I think if you show up with an open mind and a willingness to soak up information, you're going to get a ton out of it. And it might be a little inconvenient. Maybe it's too early, maybe it's too late for you. And just a question of whether you know, how much you want to learn. And I've been saying things like that, and some people get pissed off by that in my comments, and some people go, yeah, I get that. I get that. You need to be self-motivated. If you want to get to the next level in life, you need to be self-motivated. That's probably the biggest gift. And I will give you a lot of self-motivation as well. So if you're lacking some motivation and you can drag yourself to show up, I'm going to motivate the heck out of you. So what about Nvidia, right? I was like, oh no, oh yay, what do we do? Well, just have a look at the stock chart here. Again, screenshot from Trade Vision. Greatest software ever made. Well, we build it, so I'm not entirely independent, but no, I think it's insanely useful. If you use Trade Vision, put a comment down below what you like about it, please. And I'd love to see that. So what are we seeing here? Well, we're seeing our zigzaggedy pattern thing here, right? And that zigzaggedy pattern thing is something I call a tired pattern. Nothing wrong with being tired. You ever climb a mountain? What do? Well, you go up, right, to a certain plateau and you sit down and you have a bit of a banana cake or something. That guy likes eggs. Snacks, have a cup of coffee. And after about half an hour of resting your legs, you got loads of energy again, so suddenly. And then what do? Well, typically these things continue to that side, right? Not saying it will, I'm just saying that's typically what it does. So what are we waiting for? Well, we're waiting for this to break out of the zone and cross above it. And I think at that point, we're going to have another beautiful, beautiful run up here for good old Nvidia. Largest company in the world. It's only growing at 60%. People are upset about that. But here is something that people are not even upset about because they don't even know about it, right? Which is the real scandal. Gold. This is something that very few people understand, but I think you guys deserve to understand it. It's a little more complex than just going, buy this thing, it's a penny stock, it'll make you a billionaire by Friday. So I'm going to share my screen with you. You've got two charts here. You've got at the top, gold, and at the bottom, you've got VIX. VIX is the fear index, and typically gold is driven by fear. So when we worry about higher inflation, we worry about the economy tanking, we worry about war, whatever, people go out and they buy gold. That's sort of the traditional use case. But you might notice that there is a little bit of a gap between the fear level and the gold, right? And this gap is a tremendous opportunity because gold up here has managed to stay very, very consistent and solid despite fear absolutely collapsing. Just give us a little bit of fear. September is usually a good time for that. I'll show you why in a second. And I think gold could go a lot higher. So I doubled down on some of my gold stocks this week. I don't tend to buy digital gold like this, like GLD or one of these ETFs. You can. I tend to buy gold miners because I think the opportunities are a lot better. And again, we'll talk a little bit about that on Saturday. But yeah, I just think this is just one of those tremendous opportunities, in my humble opinion. And then we've got, oh yeah, here's one, for example. There's one of the gold miners that we started buying when? Here in May. So May here, that was the entry point. That was the buy. And we're up 100% on that, if you'd held it, which is pretty decent. And it's just the gift that keeps on giving. And gold, by the way, in the same period is up about 30% or something like that. So it outperforms tremendously. And that's just a little bit of skill. Honestly, making your money work better for you, in my opinion, is what? It's two factors you need. You need 90% mindset. You need to actually want it. You need to realize it's possible. I had a German chap write in my comments yesterday, and he wrote something like, you're telling everybody that they should, not have to work, how dare you, this kind of thing, right? He got really offended by it. And I get that, because he was probably shocked by it. That's the mindset. And then it's 10% skill. The skill is really important, but you're never going to acquire the skill. You're never going to use the skill unless you're actually in a place of mind where you realize money can actually work for me. My money, whether you have $10,000 or $1 million or $10 million or anywhere in between, it's a business. It can be a 10K or 50K or 100K business. It's a business. And the business you have, you're not managing it. Most people aren't, right? So if you realize that that's a thing, if you realize that money can actually work for you, and you look at all the wealthy people I know, what do they live off? Their money. Right? Their money easily pays for their lifestyle. And it's a cool thing, and anybody can achieve it. Anybody. But it's a question of mindset. So if you're just a little bit open to that, join me Saturday, felixprehn.org/training. I'll open your mind just a little bit wider, and then we're gonna shove some skill set down there too, because the two are the winning combination. So we'll teach you how to do breakout stocks. We teach you how to keep your gains, how that's automated. You don't have to stare at charts. You don't need any time. You just need to have a willingness. And look at this. This just came out. This is the economy, right? It's the economy, stupid. Well, what's the economy all about? This is the GDP data. And it came in at some extraordinary number. It was revised up to 3.3% growth. Not exactly the economy that's faltering under the tariffs, is it? Complete nonsense, of course. Why? Because, well, the US economy is actually pretty strong. And we're seeing, and that's probably the most exciting part in this data point. Let me get a dark blue pen here. You see that little bit of dark blue stuff here and that little bit of dark blue stuff here? That is fixed investment. Now, what are investments? Well, what's the biggest investment in the US right now? Anybody? Put it in the chat. Anybody? Anybody? Data centers. Yes. Have you seen that Zuck and Co. are spending a fortune on data centers? That's where that data is showing up. And they revised that up for last quarter tremendously as well. That is one of the things that's going to keep the US economy afloat. So keep watching out for that. It also tells you that they're actually spending what they say they're going to spend. What about the AI rally? Is it too hot? Is it something that needs to cool down? Well, this tells you, let me move this over a little bit so you can actually see the whole thing. You can see the whole thing, right? It tells you two things. It tells you in blue how much essentially of funds, how heavily invested are they in AI. So the blue thing is AI. This is data from Goldman Sachs, big investment bank out there. And at what level are we? We're here, right? So if I draw a little line across, are we at extraordinarily high levels? Reasonably high, but we were much higher in April of 2024, right? About 20% higher. So it's possible, actually, more money could pour in from institutions into the whole AI thing. So we're not necessarily at the top of the market. There is potentially room to go much, much higher. And then there is a little bit of a kicker and a little bit of a warning. September is typically not a good month. Why? I don't know. It's a seasonality thing. Typically, people come back from their holiday or something. I don't know what it is. Maybe they spend too much money in Saint-Tropez or something. No idea what causes that. Is there some tax thing in September or something that's got something to do with it? I really couldn't tell you. I'm sure some of you can probably tell me. But all I know is that September is typically not a great month. What does that mean? Is it bad? Is it good? Opportunity. It's opportunity. It's opportunity to buy some of the good stuff lower. And it's also opportunity to, as everybody expects this, to maybe go in a little bit into more conservative sectors that might benefit in that situation, right? That's what we've been doing. We've been buying some things like home builders and boring stocks. That boring stocks are good. Boring stocks are great. Boring stocks that make you money are amazing, right? I like boring stocks that make me money. So I'll show you more about that on Saturday as well. How do we find the boring stocks? And by boring, I don't mean no return. I just mean freaking home builder, or a home furnishings company, or really, oil services business or something that nobody talks about because it doesn't get you the headlines. That's what we're going to talk about. So join me Saturday. And then we got a little bit of a kicker here just to take us into the weekend, and that is Waller, who really, really, really wants to be Fed president. Waller is a Fed chair, rather. He's a Fed president. So there are lots of presidents at the Fed, and then there is one chief, and the chief is the chair. And he really wants to be chair. So he says he anticipates additional rate cuts over the next 3 to 6 months, as in more than is priced in. And he's just going all in for the pitch to make sure Donald puts him in place. What is that going to do? Well, what does lower interest rates do? Well, lower rates plus lower taxes, corporate taxes, obviously, not for the, hoi polloi. And what does that mean? Well, that tends to lead to higher stock prices. Yeah, it might also lead to a little bit of inflation. So what if it also leads to more inflation? Or would that be bad? Well, gold will love it, for example. Right? Asset prices generally love it. Asset prices always go up more than inflation, usually. So there is opportunity in this. And maybe you just really, really have strong opinions about this president of yours. You're like, he's not my president. Well, it's not really how democracy works, is it? You got to put up with the ones you like and the ones you don't like, and you just got to figure out how you can make more money from whatever they're up to. And the easiest way to do that is literally just by following the money. So join me Saturday, my friends. FelixPrehn.org/training, and I hope you got some value out of this. Cat's asleep. It's a bit rude, isn't it? And I look forward to seeing you on Saturday, and I wish you a glorious Labor Day weekend. And I said some things the last few days, like every day should be Labor Day. And if it isn't, it just means because you're Labor. And some people take that the wrong way, that, I think, I don't know what they think. I actually honestly don't know what they think, but some people in my comment section are going a little bit nutty on it. And it just means I'm triggering you, right? And sometimes I actually do that intentionally, not because I want to upset you. I just want you to think a little bit harder about this framework we've been given, because we've all been conditioned to believe certain things are normal. Now, I started off as an intern in a .com company that went bust while I was there, right? I went to college. I was no good at it. Couldn't get a job that I wanted. Very, very luckily got a banking job, completely random. So I was a corporate guy, working very, very hard. I managed to get out of that. I started businesses. Now, at each one of those steps, my mindset shifted and my world altered to like, this is now normal, right? I thought it was normal to work 16 hours a day for a corporate. And then I thought it was normal to work 16 hours a day, 7 days a week for myself, right? Not healthy, by the way. Now I think it's normal to wake up in the morning and go, ooh, what fun things are we going to do? That's a big gap, and it didn't happen overnight. It took me quite a while. But the normal you've been given by your parents, teachers, community, friends, it's just a subgroup of humanity that believes that and therefore accepts that. And there are other people who don't, and that's where they're doing something different. So I think you got to ask yourself, am I 100% happy and confident and satisfied with where I am? If you are, amazing, brilliant, right? Please share it with people. Let's make more people happy. But if there is a little bit more that you'd like, if you'd like a little bit more security, if you'd like a little bit more fun, a little bit more vacation, a little bit more time with your family or your furry creatures or whatever it is you want to do. Maybe you want to do something creative, or maybe you want to give back. Maybe you want to set up a charity. Maybe you want to help people in your community. There's a million reasons to like find more freedom. Well, if that's you, it just means you need to find a way to come out of the box you're currently in. And the way I imagine it, do you remember those Russian dolls? And there was always a doll and a doll and a doll and a doll. I think that's the way the world works. And we tend to be born in the really, really small doll. And then we got to like find our way out, right? So that's sort of how I picture it. And my goal and my mission here is just to get more people into a bigger box, because the bigger the box, the happier life is. And the more you can do fun stuff, and the more you can give back, and the more you can have an impact, and the more happy you are. And you know, when you're happy, people around you are happy. It's just very, very simple energy, really. So see you on Saturday, and I wish you a beautiful holiday. All the best. As a former banker, I've seen my fair share of semiconductor rallies. But these three stocks are potentially so good that it needed a golden retriever nose to sniff them out. That was Winston back there. And I'm going to walk you through them. I'm going to make this simple. I'm going to make this beginner friendly so everybody can understand this, everybody can benefit from this, and so you can learn how to find these kind of stocks yourself. Now, if you look at a semiconductor chart, you're probably looking at Nvidia and you're like, oh my God, it's gone up so much. The opportunity is kind of gone. Not entirely true, but there is some truth to that. But there are semiconductor companies